What's the best way to start investing in 2026 in the Indian stock market? As a certified financial planner and a SEBI registered research analyst, this is one question I get asked every single time, especially by HNIs and UHNIs who already have a set portfolio but want clarity, structure, and conviction. So instead of giving generic answers, I decided to break it down properly today. In today's video, I will be decoding 5 key investment trends that I believe can meaningfully shape your portfolio in 2026 and beyond. These are investing trends that you can track and evaluate even from your laptop. Before we jump in, a quick reminder, I'm not a free financial advisor. This video is strictly for financial education only. My role here is to make you financially literate. Actual investment advice is only provided to our paid clients. Also, have you joined our investor community yet? Every week we take up one focused topic and decode it. You can also book a one-on-one personal consultation with me to understand how we can actually structure your portfolio. And as always, do your own research. Alright then, let's begin. First up, REITs and real estate. Indian real estate is seeing a structural shift. Office space absorption is improving in top cities and residential demand remains strong in premium as well as in luxury segment. REITs, particularly commercial REITs, are offering an attractive combination of steady rental yields and capital appreciation. In 2026, I expect the market to reward REITs that focus on high-quality assets in prime locations and sectors like logistics and warehousing. For investors, the key is to pick the REITs with long-term lease agreements, strong tenants, and effective management. This is a low-maintenance way to gain exposure to real estate without directly owning any physical assets. Next up, energy and renewables. India is aggressively pushing its green energy agenda, and this is creating a massive opportunity in solar, wind, and battery storage sectors. Companies focused on renewable energy, infrastructure, and technology stands to benefit from government incentives, global ESG flows, and rising corporate commitments to sustainability. Investors, solar-focused energy companies, renewable infrastructure funds, and ESG-aligned energy portfolios are worth considering. Over the next few years, returns in these sectors may be uneven, but the long-term structural growth story is very strong. For a high net worth portfolio, I'm recommending a mix of listed equities, private renewable funds, and green bonds. Moving on to metals, gold, silver, and copper. Gold remains the ultimate hedge against inflation and currency volatility. In 2026, I expect moderate appreciation, especially as global interest rates stabilize. Silver, being both precious and industrial metal, can benefit from both safe haven demands and industrial recovery. Copper is a strategic metal, critical for renewable energy, EVs, and industrial demand. Its outlook is tied to the global infrastructure growth and energy transitions. For my clients, I usually allocate in gold and silver as a hedge, while copper exposure is strategic, focusing on long-term secular growth linked to industrial and green demands. Finally, technology. This sector continues to dominate wealth creation in India. In 2026, I see AI, cloud computing, fintech, and enterprise software driving the growth. Indian tech companies are expanding globally, benefiting from digital transformation in the West and robust domestic demand. For high net worth investors, I recommend a mix of large cap tech leaders for stability, select mid cap innovators for growth, and exposure to emerging tech themes like AI and automation. Diversifying within technology is the key. You want a portfolio that balances high growth potential with extremely strong governance and scalability. In summary, 2026 is shaping up to be a year where diversification across REITs, renewable energy, metals, and technology can deliver both growth and protection. As always, investment decisions should be aligned with your risk profile and long-term objectives. If you want a detailed strategy for these trends, I help HNIs, UHNIs, and investors structure a portfolio that capture these opportunities effectively. Thanks for watching. Stay ahead, stay invested, and let's make better investing decisions in the year 2026 for wealth creation and growth.